Hey guys, welcome back. In today's video, we are talking about the AMC massive comeback, the 450 billion collateral loss, the value transferring to AMC, and many more in this video. First, we take a look at this. AMC Q3 2025 setting up for a massive comeback. Don't let the headlines fool you. The quarter was all about positioning for the rebound. So in yesterday's video, we talked about the AMC earnings and we talked about both the goods and of course the bads as well. Some of the things to mention was of course the revenue. Now we already talked about it. AMC revenue beat estimates. However, it was lower than last year's, but you have to account for the slower box office quarter. But we also mentioned the fact is how AMC, even with a similar revenue, they have made their business structure efficient to the point where they are actually able to still make more money. So even though we saw the revenue actually go down, you have to realize AMC is able to still make more money from that. Then we have talked about the 2026 debt fully wiped out after a major July refinance, which is possibly the biggest point of the earnings, because when you take a look at the net loss, it was a huge change from the previous year. We're looking at close to 300 million as opposed to 20 million from last year. And a big reason for that was because it accounts for the money used to pay back these debts. And that itself is of course a big thing. Many people think that AMC is just losing that out of nowhere, but you have to realize that they use that money to pay off debt. And then you still have to understand that they still have 365 million cash on hand. And so we are seeing how AMC is beating estimates. They've positioned themselves very well. They are proving them the strategies to be correct. And so this is how we know that they're positioning themselves for a very good comeback. You can see Adam Aaron talk about this as well. And you can see how they beat the estimates. We did 1.3 billion in revenue, where the street only expected 1.235. We did 122 million EBITDA, the street expected only 96 million. So from here, you can see how well AMC has done in terms of the fact that they are beating estimates. Once again, if you want to compare with last year, which is something you definitely should, you have to realize with the efficiency of AMC as well and account for the fact even though we are 3% lower than last year, we are actually able to make more from that. And then a big thing about them is talking about we found some real gems in the quarter. A US market share up to a record level, contribution per patron up to a record level, revenue per patron around record levels, free cash flow improved. And so all of these things are really the things that we should be focusing on. Like we've said, it's about not where AMC is at right now, but when AMC gets to that stage where it's producing cash and it's putting themselves in the same position as Cinemark, in which we've done the comparison, where they are able to buy back shares, where they're able to not only issue dividends, but increase the dividends. And that all comes to the point when AMC is able to position themselves. And that's exactly what they're doing now. You can see our EBITDA was higher in Q3 of 2025 than it was in Q3 2019. Despite having 31% fewer guests. And this is what we talked about with efficiency. Even if we're not looking at the box office number to be as well, or if we're not looking at the attendance level to be as well, AMC is still able to make more revenue than previously because of how efficient their model is right now. And now I think, we have to say this because of how well AMC's done. AMC signal 2025 Q4 poised for highest box office in 6 years as market share climbs to 24%. And I think this is something that needs to be talked about, and it's how well, and once again, the highlight of the start of this video has been talking about AMC position themselves. And so we are seeing how AMC's put themselves where they have 24% of the market share. Another key word here is climb, which is obviously suggesting the fact that they are increasing. They have done the improvement to get them here. And it wouldn't surprise me to see this market share climb up higher as well. We've already seen how AMC has a higher revenue than Cinemark. We saw Cinemark around 900 million, AMC at 1.3. And so you can only imagine how the gap is only going to get bigger. And we talked about how AMC, once they get to that stage where everything is fully functional, is fully healthy, you're going to realize just how much money they will make than the other competitors within the industry. And we have to look at Adam Aaron's kind of hints that he's dropping. On our earnings calls, I said there'll be an 8-week sprint to year end because we have one or more new engaging movies coming out almost every remaining week this year, including what I think will be the 2 highest grossing domestic box office movie of 2025, Wicked and Avatar. And so what we have right now is the Q4 of AMC is definitely looking like it will stack up very, very well. And what we talked about, and we have to talk, we have to look at this fully transparent, is that as we see AMC's put themselves in a very well position, this Q4 will say a lot, because we're able to see AMC not only increase their revenue, but also increase their profitability, decrease their operational cost. Then you can see how everything we talked about for this quarter of AMC will be correct, and we see in terms of what their long-term plan is. And so pretty much for AMC right now, we're looking at how they are operating very, very well. And this is then met with, of course, their shorts, because the shorts needs to push AMC down. The narrative about AMC is that it's still a bad company. Despite the fact we're beating estimates, despite the fact we're paying off debt, the narrative on AMC is still negative. Now, it's not a surprise that it's happening. And they're pairing this up with, of course, the AMC short. You can see they said the shorts were gone, but the reality check, 48.7 million shares are still sold short, nearly 10% of the flow. And we've always talked about this, how the short data in which we are getting are the very minimum. We've already talked about how swaps are used, how these baskets of swaps are used to hide away, how these offshore firms are used to hide away the data so that they don't have to report it. And so we have to realize that even with the data in which we are seeing here, it's still the very minimum. But this still goes on to the point where if they are not worried about AMC, they wouldn't feel the need to continuously short AMC. They wouldn't then feel the need to go beyond that by shorting AMC through swaps, by shorting AMC through offshore firms, all for the sake of hiding the data. You can even see here, AMC Cinema post-earnings is up 7.6% on 4.3 million volume today. AMC pre-earnings is up 0.0% on 19 million volume today. And this is the comparison between the two. Now, yesterday we've already talked about there are, of course, very good pros about Cinemark as well, because when you take a look at the earnings, what we saw was that they also announced a 300 million share buyback program. They've increased their dividends. These are, of course, very, very positive news. So it's not a surprise to see Cinemark go up. But what's interesting is talking about what we are looking at between the difference of the two. And once again, it just goes on to talk about how Cinemark is a 120% institutional owned company, whereas AMC is a 95% retail owned company. And that itself is really the biggest driver for why there's always such a big disparity between the movement of AMC and Cinemark. It's once again, institutions don't want to see retail win. But this is all going to come to an end right now, as what we see right now is the market has never been this overvalued. The four major indicators now average 178%, the highest ever. One of the biggest things we've been talking about on this channel outside of AMC is essentially the overall market. Now, the reason why the overall market is important is because when we look at stocks that are overvalued, it would also means that these institutions who bought these stocks and used them as collaterals have all got these collaterals overvalued as well. So it's a double-edged sword. The collaterals being overvalued means they have a lot more money to then use to manipulate AMC. Now, the double-edged sword is being that when everything's overvalued, it'll come to a point where they have to drop. And when these overvalued stocks drop, so would the collaterals. And possibly we're seeing this happening right now. When you take a look at, you can see the market cap for the companies today. What we're looking at is some of the biggest companies, some of the companies that we talked about how they used as collaterals, such as Nvidia, are all starting to drop. Now, recently there have been a picture going around with Michael Burry, and he's taken a massive $1 billion short position against Palantir and Nvidia. And you can see Palantir is down 6.84%, Nvidia is down 3.65%, AMD is down 7.27%. Now, this is to say that these stocks right now who are overvalued are all seeing massive drops, and that itself is seeing the value being decreased, being disappeared. You can see Nvidia has now lost $450 billion in market cap since Monday in its steepest 3-day decline since January 2025. So if you really want to understand just how much value they're losing, this is it. And ultimately what this means is that as we're seeing the collaterals vanishing, as we're seeing all of these stocks drop, so will the power of these institutions. And it also explains and shows how good of an investment AMC is, because despite the fact we're seeing all of these companies drop, 3.65, 6.84, AMC today is up 4%. Now, this is also a reflection of yesterday's earnings, which showcases how the industry views AMC's earnings. So despite these articles, the market is obviously telling a different story. But what we're seeing, and we've said this already, is that AMC has been said within the industry, is that this industry is something of recession proof, and it is the safe haven for people who don't want to see massive value disappearing. And so as we're looking at all of these tech stocks dropping, we're looking at AMC up 4%. And you can understand why we talked about this. And this is what we've said with the value transferring from all of these big major stocks towards AMC. And that is also because of the fact that the value that were once in these major stocks are used as a way to short AMC. And now if we're going to see a reverse, you're going to be seeing how that value is then going to, which once pushed AMC down, is then going to be used to propel AMC up. As always, this is F Financial Advice, so do take out a second of soul, make sure you do your own due diligence and research, and I'll catch you guys next time.